Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday the 15th of December 2022. And as promised in our video on Tuesday, we put a link below, we are talking very briefly about the FOMC decision to raise interest rates and the comments made by Fed Chair Jerome Powell and what that could mean for gold and silver prices moving forward. Let's take a look. Okay, so let's take a look at what Bloomberg has reported today. Powell says Fed still has a ways to go after a half-point hike. This was published last night, then updated this morning. Chair Jerome Powell said, "The Federal Reserve is not close to ending its anti-inflation campaign of interest rate increases as officials signaled borrowing costs will head higher than investors expect next year." And that is really crucial. Higher than investors expect. "We still have some ways to go," he told a press conference on Wednesday in Washington after the FOMC raised its benchmark rate by 50 basis points, our prediction, to a 4.25% to 4.5. Policymakers projected rates would end next year at 5.1%. according to their median forecast, before being cut to 4.1 in 2024, a higher level than previously indicated. Now we have to say we listened to our friend, yes, you've guessed it, Peter Schiff, on a video podcast with Nigel Farage, and he said, wait for it, the Fed needs to raise rates to 15, 16, 17% in order to combat inflation. Sorry. It doesn't. Yes, we're not going to get down to 2% for some time to come, that's for sure. But when one bears in mind that this same individual, only 7, 8 years ago, was saying, the Fed can't raise rates because it's borrowing too much, and now he's saying it's got to raise them to 15, 16, 17%. The joys of YouTube and holding people to account. Anyway, let's go back to this. Powell said that the size of the rate increase delivered on Feb 1st at the Fed's next meeting would depend on incoming data, leaving the door open to another half percentage point move or a step down to a quarter point. And he pushed back against bets that the Fed would reverse course next year. "I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way," he said. "Restoring price stability will likely require maintaining a restrictive policy stance for some time." And then, not surprisingly, the S&P 500 index dropped as investors digested the news. We've said all along that while you have a situation with inflation considerably higher, A, than the Fed's target, and B, higher than interest rates, then interest rates still have to rise. They don't necessarily have to rise as aggressively as they have done moving forward. But managing a market, there is a lead-lag situation. They lead with interest rate rises, and then the economy lags in terms of its reaction for a period of a couple months. And the same happens when they reduce interest rates. You have that lag effect. And it's important that when the brunt of the Fed's interest rate rises have already taken place, they wish now to fine-tune what is happening. Now, will they succeed? Yes, but it's going to take longer in our view than even the Fed is predicting. However, they know that with a 30+ trillion national debt, they can't raise rates to 15 or 16% without entirely collapsing the currency. Anyone who understands economics knows that, because they would have to print the money in order to pay that debt. It's bad enough it going to 5 or even 6%. We ourselves put an absolute limit of 5.5%. Might not quite get that high. We'll wait and see. He ends with a comment. "It's our judgment today that we are not at a sufficiently restrictive policy stance yet. We will stay the course until the job is done. And the vote on the interest rate rise was unanimous. So let's now take a quick look as to what happened to gold and silver prices. Well, if you recall, last Friday gold closed at $17.97. On opening, it went up just for a very short while, then dipped, attempted a rally, dipped then on Monday to its low of $17.75, and then over Tuesday, it rose. Why did it rise? Because the CPI data, which then came out, actually was probably the best way to describe it, quite good. And we mentioned that in the video we produced on Tuesday. And it was envisaged by traders that the Fed would not be hawkish on its interest rate rise announcement. Our view was it will raise rates by 0.5%, and much then depends on Fed Chair Jerome Powell's comments thereafter. And we can see that after that initial peak, the markets thought, we're a little bit overexcited here, and dipped down until yesterday. And we had the interest rate announcement, and then we had Fed Chair Jerome Powell's comments. And those comments hit the market. So much so that basically we are now trading gold lower than Friday's close of $17.97, even though gold went up to $18.24. And if we look at a 24-hour chart, you can see that dip here really started on Wednesday at our time. This is GMT time at 11 o'clock. So you see the dip, and it's continued so far through Thursday. Now looking at silver, we can see in the day exactly the same pattern. Until last night, silver was doing quite well, and then has started to fall off again. And if we have a look, the silver price is $23.11. It closed, in fact, on last Friday at $23.48 and went as high as $24.14. Very similar pattern. Both gold and silver are operating broadly based on interest rates and the fear of them. If we take a quick look at equity markets, we can see that in the United States they fell on average 0.5 to 0.75%, and in Europe and UK this morning slightly worse, in fact over 1% for the euro, the DAX and the CAC, and just under 1% for the FTSE index. If we look at the dollar index, we can see that the dollar has regained some composure and is now back at 104.24. That's up almost 0.5 point on the day. So where does this lead us moving forward? Well, we're still waiting for analysts and traders to absorb the information that came out yesterday. Clearly, there was an expectation that the Fed was going to be extremely dovish. It did actually reduce rates less than those who feared the worst by 0.25%, so that the rates went up, the Fed funds rate by 0.5%. Some still thought 0.75% was likely, but a number were beginning to hope that 0.25% was possible. But it's the comments from the Fed chair, and we'll find out on the minutes that will be produced next week, just to confirm that the Fed is still concerned about inflation. It is going to be data dependent. The CPI figures announced this week are positive, so it's now a question of will those figures continue to improve, or, and let's not forget this, the oil markets have come down in terms of oil price per barrel, but there are comments amongst international financiers that oil could go back above $100 a barrel again very, very shortly. Now, if that does occur, and we're not saying it will, but if it does, then any cutback in inflation might very well be short-lived. Watch the oil markets as well as the currency markets. That's what we should be doing. And between Christmas and the New Year, we shall be giving our forecast for gold and silver prices for 2023. And on Saturday, our forecast for the coming week in the run-up to Christmas. Thank you so much for listening. Please, if you like our videos, give us a thumbs up, subscribe, press the bell sign. Until our video on Saturday. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.